Hello, everybody. Welcome to our webinar. We're just going to give attendees a couple of minutes to get into the meeting and get situated. So we'll get started in just a couple of minutes. All right, I'm going to give it until about 12:05 and then we'll get started, everybody. All right, I'm going to give it about one more minute and then we'll roll right into things. So thank you all for being here. All right, let's get started. So hi everyone, and welcome to our webinar, Setting Up the Next Generation for Financial Success. We're so glad that you could join us today. This session is all about helping parents and young adults build a strong financial foundation together through smart habits, financial tools, and focused planning. So today you'll hear from some of our very own Signal Financial team members, and I'm going to go ahead and let them introduce themselves. So we will start with Waj. Waj, if you want to introduce yourself.
Of course. Good afternoon and happy Friday, everyone. My name is Qureshi, and I am the retail banking market leader for Signal Financial for a little over a year. and helping our branches and our communities with our members to flourish their financial well-being and to help them with their financial goals. It's been about, my overall experience about 17 years with the financial institutions, and now with Signal, enjoying my role.
Thanks, Waj. Hello, everybody. Good afternoon. My name is Dustin Gray. I'm the Digital Services Manager here at Signal. I've been here a little over 3 years. I've been in the credit union industry for 16, and 12 of those years have been in the digital space or the digital arena. I'm just passionate about, about digital banking, about bringing the best experience we can to our members. So I'm looking forward to this conversation.
All right. Greetings, webinar. My name is Whitney Banks. I have been a part of the Signal Financial family for 5 years now. I do have about 10 years of experience within the financial industry, and my passion is everything card related, whether it is debit or credit. And I currently act as the card services team lead here at Signal.
Thank you, Whitney. My name is Alec Patrick. I'm the Chief Operating Officer here at Signal. I've been at the organization for almost 8 years. This month actually will be my 8-year anniversary. So it's been one of the longest places I've worked, but I have 15 years in the credit union industry. My background is technology and online banking, similar to Dustin, where I've been diving into digital and improving and upgrading those systems. So really excited to talk to you all about financial education today.
Awesome. Thank you both. Thank you all so much. And then finally, I'm Dorian Young. I am the digital content marketing specialist here at Signal, and I've been here for almost a year and a half now, and I manage most of our digital advertising, our social media pages, marketing things such as this webinar, and I'm really excited to host this because it's my first time hosting our webinar. So I'm really happy to be here, and I'm really excited about this conversation. So everybody that you just heard from, they will be sharing tips and insights on youth accounts, money management, college savings, and building confidence financially from a young age. And then just to let you all know, we will be wrapping up with a live Q&A. So feel free, if you all as attendees have questions throughout the webinar, feel free to drop them in the Q&A at the top of your screen throughout the session, and we will get to them at the end. So let's just go ahead and dive right into things and get started. So Waj, I just wanted to ask what the benefits are of opening a Bright Future checking and savings account with a credit union like Signal, and how does it set young adults up for financial success?
Absolutely. It's a great question. And we take pride in this product with the Bright Future Savings Account and the benefits. You can see the way we invest in their future, the little kids, especially with the phases of 0 to 6 years, are very important when Bright Future Savings and share certificates are perfect for long-term planning and investments. Now, the other phase, which is between 7 to 10 years, teaches the art of savings, set savings goals, introduce financial planning, and guide your little one to obtain online banking basics, because it's a technology world, every little kid have their phones in their hands, but just once we're going to start giving them the basics on that, they get acclimated to that. Now, the most important phase when it comes between 11 to 17 years, that is the time of foster independence. And Bright Future Savings Account that helps, to evolve Bright Future for teens by adding Bright Future checking and debit card features. That's pretty interesting. They're excited. They have the debit card in their hands with the supervision of their parents and providing monitored financial independence. When the time comes when they want to be having the financial freedom, that's an exciting period as young adults. Our Bright Future supports their journey with advanced options from auto loans and credit cards to Roth IRA exploration and more. And here's the exciting part. It's never too early to start, teaching kids and young adults about proper financial management, budgeting, and savings can have a long-term impact. That's why Signal's Bright Future solutions are more than just a savings and checking account. For example, our online banking and mobile app that allows for convenient management of accounts, ensuring accessibility anytime, anywhere while still under your supervision. And once that's the time that, the sensitive time when they have the debit cards between the ages of 11 to 26 that I was mentioning, that's the time when, just offering the freedom of making everyday purchases. And the inclusion of a debit card is a significant step towards financial independence. Plus, parents can easily transfer funds once they're just going to be within the joint account holders. And the beauty of our Signal Smart Savings within the Bright Futures, establishing a savings account from a young age lays the foundation for financial responsibility and goal setting, promoting a habit of saving early on. So this is what I can tell you, that this is the most important thing and, benefits with our having a Bright Future savings.
Awesome, thank you. It's nice to hear that, when you're setting up your child or your young adult with finances, that you don't have to do everything at once. There's specific stages that you can implement or specific solutions that you can implement throughout their adolescence. So that helps it to not feel as overwhelming and as crazy to try and set everything up at once. So that's really good to know. And then could you just talk about how opening a youth account can help young adults develop a sense of confidence in managing their money and financial decisions into adulthood?
Of course, very important question. When youth accounts are hands-on learning, I would like to start with that the tools that empower young adults to take control of their finances. For example, in a real-world practice, managing their own account gives them a safe environment to make small financial choices, of course, with the parental guidance, and learn from them without major consequences is very critical. And nowadays, with the security concerns and scamming and everything, so that's when we give them the supervision and the idea as to how we need to have the best practices. And that's what the real world practice is when they're managing their online banking. Now, increased awareness is another thing, that's seeing where their money goes. For example, via the statements or app notifications, very helpful. Helps them understand spending patterns and become more mindful. Of course, like I said before, with the parental guidance, with room for independence, like many youth accounts allow parents, and with us as a parents to monitor activity, offering a safety net while still giving the young adult the freedom to manage their own funds, and confidence through control when young people see themselves successfully saving for something or avoiding overdraft fees, because it's an easy miss when they're using it. And for example, it's $100 and all of a sudden the expenditure of $110 overdraft occurred. So with that, control becomes very easy, where they feel more capable and in control of their financial future. And that gives that with the decision-making skills as they start making choices, how much to save, when to spend, what to prioritize, which builds trust in their own judgment.
Awesome. Yeah, it's kind of like checking homework in a sense, where these children and these young adults, they have the ability to be financially independent, but they still, like you said, have that safety net. So if there is something that they're having an issue with, or if they have an overdraft, like you were saying, it's a learning lesson of a sorts, and there are people there who can monitor and remedy any issues that they might have along the way. So thank you so much, Waj.
Appreciate it.
And then, Dustin, I have a couple of digital banking questions for you. So
Sure.
I know Wash touched on a few things about online banking, but I was just curious if you can talk about any specific online banking tools or features that Signal offers to help young
Yeah.
adults track their spending, set savings goals, and develop those healthy financial habits we've been talking about.
Yeah, absolutely, Dorian. So Signal, we offer multiple financial tools all through the digital platform, not only to help the young adults, but our entire membership. So one of those, what we call our financial wellness tool, and this tool offers numerous ways to view, track spending, as well as plan for the future by creating what we call savings goals. Those savings goals can be anything of your choice, whether that's saving for college tuition, for the children's first car, for first house, whatever the case may be. So also in that financial wellness tool, there's another feature in there called a self assessment, and that's just a self-service tool that our membership can go to and take a self-assessment as to where their financial pattern is right now and what the future looks like, and give them suggestions and goals to shoot for in the future. So that's one of the features that we have. Another one, which just happens to be my favorite, is the credit score dashboard. This is a tool that offers real-time credit score right at your fingertips, both on our desktop version as well as your mobile app. Not only can you view your credit score, this tool allows you to view your entire credit report, download it, export it, however you want to look at it. If you see that there's discrepancies or whatever the case may be, we have the ability to go in and report those. Those discrepancies on your credit report. It also offers the ability for credit monitoring. So if there's something that hits your credit report that you know that is not supposed to be there, that service is there as well as setting up alerts like Waj referred to a little bit ago. Your credit may have been pulled, or you got a new credit line, or whatever the case may be. You could set those type of alerts up that you would get notified when those types of things happen. And those the best thing about that is those alerts are in real time. So it's nothing that's what we call like a batch version where you get a big file at the end of the day and then the alert gets pushed out. These are all real-time alerts. So if something happens, you're notified immediately.
Awesome. Thank you. That kind of goes hand in hand with that safety net we were talking about, all those alerts that you can set, monitoring your credit, being able to file those discrepancies.
Yep.
Those are all things that I definitely didn't learn at a young age, and I definitely wish that I had. So it's good to know that those are available to young adults as well.
Yeah.
And then
it's funny, Dorian. I was talking to my son earlier, and he talks about. I said we're talking financial wellness and financial literacy. He says I know all about that. I said you might want to join with us and just take a look at what some other folks have to say in the industry.
Yeah, definitely. Yeah, I mean, it's great that he can learn so much from you. And then I'm definitely, to this day, learning a lot from all different people in the industry, which is great. There's so much knowledge out there.
Absolutely.
Yeah. So just piggybacking off of that, can you talk about how Signal specifically empowers young members to manage their accounts independently, or what kind of ways parents or guardians can stay informed and help support them through their financial journey?
Yeah, absolutely. So Waj touched on a couple of them around alerts. I think that's the biggest one. We offer the list is huge. I don't know the exact number, but we offer multiple alerts that our members can go in and set up, whether that's a transaction, debit, a credit, a direct deposit, whether some information a profile change gets made. All of those things can be set up and notified in real time. So that's a big one. We also offer the ability for our members to add extra what we call external accounts, which would be external to the member, but the ability to add their children's accounts to that for view only, so they can see the spending and so forth around what is happening in that youth account. Alerts, of course, are also available that our members can set up for the younger generations, their own specific personal accounts. And then last but not least, we offer multiple financial resources, education articles, both on digital banking as well as our website. So there's a lot of resources, a lot of articles that we've put out that are very helpful.
Yeah, definitely. I know there's the content corner on the website and a webinars page. We'll definitely be posting this recording specifically so people can access it whenever they need to. And yeah, it's great to know there are also education pieces as well as those tools that are available to those people. So thank you, Dustin.
Absolutely. Thanks, Dorian.
Yeah, of course. And then I know we touched on the credit score dashboard a little bit, so kind of rolling into that realm of things. Whitney, I was curious if you can talk about how parents can help young adults establish and build their credit responsibly using a credit card at a young age, and what the best practices for managing that very first credit card that they give them could be.
Of course. So when discussing credit responsibility, it is important for young adults to initially fully understand what credit is and how it works. So parents can definitely start the conversation by explaining that a credit card is not free money. It's borrowed money that must be repaid. It is also important for parents to review credit-related topics such as how credit should be used, how does credit card interest work, and the significance of monitoring usage and making payments on time. A good recommended rule of thumb is to always advise young adults not to spend more than what they can repay each month. By paying off the owed amount in full each month, young adults can develop responsible credit usage habits while avoiding interest fees. The good news is if parents do need help with the conversation with their young adult, we do provide helpful resources that are available to assist. As far as that, I do have a second recommendation for parents, which is potentially adding a young adult as an authorized user to their existing credit card. Here in Signal, an authorized user will receive a separate card that is linked to the parent's account, which can be used for purchases within the available credit limit. While the parent retains full control over the account, this arrangement pretty much allows young adults to learn how to use the credit card responsibly within a supervised environment. Um, Additionally, parents can monitor and review the young adult spending habits by checking transaction history through online banking, our mobile app, and by reviewing statements. And an added benefit to this is that parents has the ability also to set daily spending limits on the authorized user's card to help prevent overspending, which is amazing. Although adding an authorized user initially does not establish credit for young adults, it does serve as a valuable tool that prepares them to develop strong credit usage habits. Once the young adult is comfortable with utilizing credit, we would then recommend for the young adult to apply for one of our amazing secured or unsecured credit card products to begin their credit building journey.
Hey, Dorian, I just wanted to piggyback on Whitney real quick
Yeah, of
around
course.
that was a great thing, a point you made around adding adding the younger generations to the cards. And another thing that we offer online is we offer the ability to what I like to say is just lock down the card. So basically, as the adult, they can go into online banking on the mobile app, wherever the case may be, and they can pick and choose where they want that card to be used, whether it's a zip code, whether it's a certain merchant, whether it's a state, whether it's a regional location. All of that is all a self-serve option that the parents can go in and if they decide that they want to add an authorized user, they can go in and basically decide exactly where they want that card to be spent. So that's just one thing I want to add in. Another benefit for cards as well as digital banking.
Yeah, awesome. Thank you, Dustin. I
Sure.
think it all just circles back to that safety net, like we were saying, having that additional line on a parent's credit card that they already have is a great way to monitor and make sure that they are understanding the lessons and that they're really grasping how credit works and how they can use it as an advantage. And then eventually, when those young adults are comfortable enough and at the point where they can feel ready to open their own credit card and start building their own credit, they really have an understanding of how it works and things not to do. You don't want to have all those interest fees build up, and you definitely don't want to spend more of your credit limit than you have. So I think those are great stepping stones for young adults when it comes to credit. And then Whitney, I know we kind of touched on those credit solutions that Signal offers.
Mhm.
Are there any in particular that you would recommend for that first card versus if they're already comfortable with the card or anything like that?
So I would recommend definitely once a young adult decides to apply for a line of credit on their own, the best practice is for the new cardholder to fully understand the terms and conditions associated with their new card. Things such as annual fees, if there are any annual fees assessed, their interest rate, any applicable rewards. It's very, very, very important by familiarizing with the terms and conditions. This will help avoid unexpected charges while ensuring that their credit card aligns with their long-term financial goals. Amongst that, the only other recommendation is what I touched on earlier, the spending guidelines. So generally, the common guideline is to use no more than 30% of the total available credit, which helps maintain a healthy creditization ratio in credit reporting. So ideally, credit cards should be used for purchases that can be paid off in full each month or that can be paid on time. Basically, if the balance is not paid in full by the due date, any remaining balance will roll over to the next statement period, and that balance will actually accrue interest. So we do highly recommend, if you can, please just make sure you pay your balances in full on time to reduce or prevent any type of interest charges. And the last best practice is, of course, like Dustin mentioned, is using our Signal Financial app. So this app allows 24/7 access to account information. So cardholders can review their spending habits, review their electronic statements and transaction history, and they can also schedule one-time or recurring payments to assure that their payments are posted on time. And then within online banking, we do have our card controls as well, as Dustin mentioned. So not only can members lock and unlock their card at any time, cardholders can take additional tasks as far as setting daily spending limits. They can opt in to receive text notifications for transactions. They can also add their card to Apple or Wallet Pay if they're on the go. They forget their card at home. So that is an added convenience as well.
And just would like to
Awesome.
add quickly on that one, what Whitney just mentioned, just a quick piggyback on this one. Let's not forget our pop money, which is a great feature that we have. Like, if they do not have the physical card, it's sometimes not easy to carry, or there's just misplace it. Always, our members can always be on the lookout for, like, go to the closest ATM or Signal Financial and then get the code on the mobile app right there. That's the comfort right there, and then the code is going to be on the mobile phone that verifies that, and then they can just easily withdraw the money as well.
Yep, that is a convenience for our debit cards. Yes.
I wanted to
Yeah.
mention one thing as well. Sorry to cut you off, Dorian.
No, you're good. I love it. Keep
One
going.
thing I was shocked about that with my kids is even being intimidated using the card and actually not even knowing how to go and do a transaction. You give them the plastic and then it's like, all right, go to 7-Eleven to go buy something, and they don't even know how to actually use the card. So I think that's another thing we take for granted, is just going in there and tapping, or, actually actively using your credit card or debit card. But my kids actually, not knowing how to use that, were very intimidated by even that process. So I think this also helps them, get a little more comfortable. Not that we want them buying a bunch of things, but just getting more comfortable with how the transactions work and what that buying process is like in store.
Yeah, of course. And even with Apple Pay now, it's so easy to just double click that home button and hold the phone up. And
Yep.
I even catch myself sometimes, I feel like I have a association with pulling the card out and tapping versus just using my phone. So it's definitely very easy, I think, for the younger generation to kind of perhaps miss that connection of tapping versus paying with, cash or anything like that. So it's definitely good to know that they have resources that can help them still conceptualize and still learn an understanding of credit and debit cards, and even versus using cash and stuff like that.
Yeah, and that reminds me what this Alec mentioned about, like, tapping the card. Interestingly, like when my son was, and before he went to start going to college, I remember that I set the limit for his debit card when he used to just tap it. Well, the only funny part was I did not tell him that it was set up $100. Went there, is that something's wrong with my debit card. It's like, what's wrong? It's like, I was trying 120. It's like, what are you trying to do? It's like, oh, because I set the limit. Why didn't you tell me? Because it's not that, like, I didn't want to tell you. It's just like, this is a great feature so that you're not going to exceed. But once you get home, I will just explain. But you'll be all good. So I transferred as much as he needed, and then I just help him, like, because kids, they can easily go over, what they want to spend at the restaurant or something with their friends. So that reminded me. Thanks, Alec, for reminding me that. That's a great story I wanted to share. So that's a good practice. We can let our kids know, hey, I'm setting up $50 for you. Stay within your spending limits, and that way you're going to be in a good habits of using your debit card.
Yeah, definitely. And even with young adults having their own jobs, sometimes it's still good to have those limits set so they know what their budget can be when they're part-timers and everything around that. So thank you, Whitney, for going over credit with us. I really appreciate that. And thanks everybody for tapping in and sharing a little bit more insight.
No
Um,
problem.
Alec, I wanted to ask you about kind of shifting gears and thinking more in the long term of things about the importance of saving for college early and what role credit unions play in supporting those specific efforts. Because we've talked about credit, we've talked about managing accounts, but I think college is another really big piece of things, and saving for college is something that parents are constantly thinking about. So,
Sure. I mean, first, college is expensive. So I think, you need to, I'm sure everybody knows that, but if you have kids, you're really going to have to pony up quite a bit of money when it's time for them to go to college. So just understanding the cost of that. I went to College Park. I believe the tuition at that time was $6,000. And so I was doing a little research before this meeting, and in-state now is 11,000, and out of state is about 25,000 per year, and then private colleges are around 43 to 44,000 per year. So you're looking between $40,000 to $160,000 just in tuition expense. That didn't include room and board. So, if you want to send them off and actually have them stay there, food, there's a lot of costs involved in that. So really getting ahead of that is important, and being prepared. So, you just have to be prepared for all this stuff. And the other piece of this is, if you start early, you can use compound interest. So you can make interest work to your advantage. And that also helps from a preparation perspective. So I think it's really important to save early, start early, so you can be prepared and not be caught off guard when those costs start rolling in.
yeah,
Uh,
definitely.
I don't know, the second thing you talked about, the role of credit unions as well. So we talked a lot about the different products and services that Signal offers, and credit unions in general typically offer a lot of these services. So you need to be able to, track your credit score, use these digital services, the tap to pay, the savings and CD accounts, all these different tools that credit unions offer can really help you prepare for that. And I think Signal has a bunch of different resources there that we just talked about. So those are very important. Also, credit unions are focused on their members. We don't have shareholders. So, you're really focused on your members and your local communities. And I think that's another area where credit unions can offer a lot of benefit, doing things like we're doing right here, where you're offering a little bit of financial education. There's just a lot of opportunities that credit unions can offer in supporting, helping save for college, and preparing for that.
Yeah, definitely. That nonprofit aspect, I think, is very appealing to a lot of people nowadays. So, being able to offer these financial literacy and education aspects is a really beneficial thing. And then, Alec, kind of piggybacking off of that, can you talk about mm, going into more of the credit union aspect of thing? Can you talk about why it's important for credit unions like Signal to invest in financial education for young adults, and how that aligns with our specific mission and vision?
Sure. As far as investing in financial education, it's important. I think you're building relationships with your membership. So I think it's important to help educate folks. It helps firm that bond between your member and the credit union, and really builds trust between the two, so that you can help support them throughout their entire financial journey, not even just, we're talking about college right now, or even the youth accounts, but really throughout that journey. You have all kinds of things: auto loans, the credit cards we talked about, retirement, they're buying a home. There's just so many different areas where you need to be able to rely on your financial institution. So I think it's important to invest in that education, so that people will feel comfortable. We even talked about using, your kid may not even be comfortable just using a card. So that's like the most basic of the education, right? But I think you take that and extrapolate it into buying a home, and that's where or even going to college, these things become much more complicated, and you really need to understand, have a partner to help you understand and prepare you for some of this. It can be a challenge going into these things if you're not familiar with it. Even buying a car can be very intimidating, just going in there, not knowing. But as you do it, you'll learn more. So I think it's important for us to invest in education for folks. Other piece is as people get, if they get more educated, then it helps the community. So your communities grow as people get more educated, go to college, they come back and get better jobs, and I think your community thrives from some of this stuff. So I think it's all encompassing on building this financial journey as well as supporting the communities around you.
Yeah, 100%. It's nice to have that knowledge that you can have a financial partner through every stage. And, I know from personal experience, there's only so much that my parents can teach me. And it's nice to have someone who can kind of bridge that gap and fill in the lack of information, especially surrounding things like buying a house in today's day and age. They bought their house like back in the 2000s, and I'm sure it's very different from when it was then and even back in the 90s. And it's, again, good to have someone and institution that can bridge that gap and help provide that financial service and financial education.
And then Dorian, you also talked about our mission and vision. So our mission is to enable members to make smart financial decisions for today and tomorrow by building stronger relationships and smarter solutions to bank easier, bank faster, and bank better. Our vision is to empower our members to take ownership of their financial journey. So I think, like we've talked about already, being able to provide these different services, giving them the tools that they need to be able to execute from a financial perspective, I think that's empowering our members to be able to take advantage of that or take ownership of their journey. And the education side also prepares them for these things, as well as builds these relationships. So I talked about relationships earlier. I think that's a big part of this, of our mission, is to build a relationship with our membership, and then offering smarter solutions. So we talked about all of these different solutions that we have to be able to track your credit score, to be able to add authorized signers onto your cards, all these different abilities that we provide for our membership. I think helps people bank smarter and bank better. So I think those are the ways that aligns with our mission and vision.
Yeah, thank you for sharing all of that information. So that wraps up my questions that I had for all of you, and thank you for all of your insight and all of your information and tips that you shared. I'm checking the Q&A now, and it doesn't look like there are any questions to start with, so I'll leave that open for the duration of the rest of the time. But before we kind of wrap things up and before we jump back to that Q&A section, I did want to highlight something exciting that we've announced during Financial Literacy Month, and an exciting piece to, like we just talked about, help people and help young adults with their education, specifically college education. So before we close, I just wanted to share that scholarship program to support students in our community, and the foundation will be awarding an outstanding college student with $1,000 in scholarship funds to support their education and their future. This scholarship program does include both college students and current high school seniors who will be attending an accredited college four-year institutions as well as community colleges. So applications will be accepted it started on Tuesday, April 1st, and they will be accepted through Thursday, May 1st. And then the recipient will be announced no later than May 30th. And all of the information about this program, all of the requirements and the eligibility are outlined on our official website and social media channels. So that's where you can find that, as well as the submission form. And the application is open to current Signal Financial members and also their relatives. So if you have a relative who is a college student or a high school senior, they are also eligible for this scholarship program. So let me go ahead and check our Q&A. Looks like we have one question from Tommy. He asked, when should young adults begin establishing their credit, and what are safe beginner-friendly ways to do so? So, Whitney, if you want to jump in on that, I think that we're asking about what age they should be looking to start establishing that credit, and then what the best way to do that is, if there's credit cards or other ways for them to do that.
Okay, no problem. So, hi, Tommy. So, as far as establishing credit, legal age is 18 to initially start credit. It doesn't mean that you necessarily have to start your credit journey at 18. You can always start when you're comfortable. But the legal age is 18. Recommendations for starting your credit. Once you turn 18, of course, you're going to get credit card offers from everywhere in every direction. Just don't jump on the one credit card that you receive. Make sure you do your research about what type of credit card that you're looking for. Just make sure you read the reviews as far as what other people say about the card. Make sure the card fits what you're looking for. And then from there, you can definitely apply for a card. Um, I would highly recommend if you do apply for your first card to start your credit building history. A lot of people don't know this, but when you do apply for your first card, say if you're approved for a credit line that's higher than what you're comfortable with, you can always talk to the lender and say, hey, I'm not comfortable with this credit limit. Can you lower it to something that I'm comfortable to? And they can make exceptions sometimes to actually help you with that so you can feel more comfortable. Once you're able to build your credit, you familiarize yourself with the card. And from there, at that point, when you would like to increase your credit limit, you can always contact your lender back and say, hey, yeah, I would like to increase my limit. I feel more comfortable with my card now. So yes, legal age is 18, but you can definitely start the journey at any time after 18.
That's great to know. I had no idea about the credit limit, asking them to lower it instead of extending it, because I've only heard about extending it. And then I always like to bring this up now because I remember I was speaking with someone, Alec, it might have even been you on Signal Sips, and I mentioned that I thought about closing out my very first credit card, and whoever it was like, do not do that, never do that. That's your longest line of credit. Like, you'll erase all your history. So when you open that first credit card, I've learned do not close it under any means. So just another thing that credit limit point kind of brought up for me.
Yeah, so definitely the older your card is, if you decide to close it, it will affect your credit. So we do highly recommend if you're not going to use the card, just keep that credit line open. You can always place a restriction or block on the card if you're not going to use it, but closing it will definitely affect your credit.
Awesome.
Yeah, and I would like to add on this one. Since it's a great question, and at times the credit cards, of course, that builds a great, like, secure cards as well. Not only the normal secured card and secured cards. We can take a step as a secure card as well. That establishes the credit history as well. And on top of that, the age of, like Whitney mentioned, legal age 18. By this time, most kids are going to college, and that's the time when they need to have a car. And at that time, like, the parents can, of course, if they feel comfortable, they can be an authorized signer, co-signer on that. It start building the credit for the children, for their kids, and then once they just make the payments, it's going to continue to build that credit as well. So that's another point that that we can keep that in mind as well.
Yeah, that's a great alternative. Thank you, Waj. All right. I think that was the question. Yep, the question in the Q&A. So that about wraps it up for us. But I just wanted to take the time again to thank our speakers for sharing your time and knowledge, and to thank everybody who joined us today. We really do hope that this session empowers you and your family to take ownership of your financial journey and to be signal smart about your finances. Have a wonderful Friday and a great weekend. Thanks, everybody.
Thank you.
Thank you, Dorian.
Thank you, Dorian.
Thank you.
Thank you all. Thank you, Tommy.